I was going back to a previous video we did a year and 3 months ago to pull out a very specific part to show you. And when I was doing it, I was watching the video and I realized there's so many parts of it that you actually absolutely have to see right now, especially because everything's played out now. You've seen how things have moved in the economy. You know what's happened over the last year and 3 months. And then you can see what I said and then what happened. As well, I'm going to explain my view on inflation now, my updated view on inflation, and I'll give you a whole bunch of points we'll talk about that you could do, moves you could have made or could make that'll help you out in this economic environment. Economists say rent will be among the fastest growing portions of household expenses in the coming years. But so will food and everything you buy because of these inflation numbers that you're seeing. Now keep in mind, this was a year and 3 months ago. It was just when inflation was starting to get high enough that you're noticing it, that it's affecting you. All the media, the mainstream and alternative media, were all trying to spook you about how much higher inflation was going to go. And that's when I came out and explained to you that it wasn't going to go higher yet. It'll go higher eventually. And now here's the part that I was going to look for in the first place. The whole point of me looking into this video. All of that's going to be increasing in price, just as houses and rent have been. However, house prices, in my opinion, are going to come down dramatically. Inflation will go up a bit more, like I told you, and it'll stop at that level, then it'll start coming back down. This is a chart of inflation from the U.S. Bureau of Labor Statistics. Right there is where I said all the comments in this video that we're talking about that I'm chopping up here. You can see that from the point of release of the video, inflation did exactly what I said it was going to do, climbing only a bit more, then beginning its descent. And what else I've told you, more recently in fact, is that once the decline begins with inflation, it often falls pretty quickly. And in terms of the real estate comments, anybody who's been here for more than a video knows that I have a very pessimistic view of real estate values. I believe real estate's going to come down pretty significantly, relatively soon too. It's already begun. And when I made that premise, it was a time when people were trampling over each other to launch into bidding wars to buy a house. Houses were on the market for sale for very short windows of time. The time between when a house was listed till it was a completed deal completely shrunk. Everybody was fighting each other to get that house, A lot of people made offers on a bunch of houses and never got the house. 5-6 times. I know of people who did this. But when I made the premise, house prices were well beyond realistic affordability. Nobody seemed to realize that. Certainly not the media, certainly not people around you talking about buying a new house. So I got to give you a really quick disclaimer for newbies. Nothing we say in this video is intended as personalized trading advice for you. If it's your first time here, my name is Peter Leeds, and along with my entire team, we publish the world-famous Stock Pick newsletter. Now for this next part, pay special attention to what I talk about with the pain points. And that's going to really expose a lot of the pain points and risk points that are going to be affecting the majority of all people. It's an example of what you're going to see a lot more of are calls for less growth than expected, because the combination of supply chain uncertainty and the rising costs will be putting a strain on every aspect of economic growth. Every company will be affected. Every individual who's a consumer in America will be affected by these things. And they were, exactly as my premise said. Every consumer, every corporation, every organization. A lot of pain points in the economy have been exposed now. I'm always talking about the curtain, the delusional curtain being pulled back. It's part way pulled back because of all these pain points. But there's more pain points yet to come in the road right ahead of us coming up pretty soon. For example, pensions have major shortfalls, massive mismanagement, and the real weight of the depth of this problem has not even come close to yet being realized. It's a matter of time, and that's when it becomes a pain point more visibly. But first, right now, it's just a problem that nobody's looking at, no one's paying attention to. And you guys know I'm working on a video right now called The Big Inflationary Bounce. Here's a grab I took out of the script of that video I'm going to read to you right now. I broke it down to pain now and pain to come. Pain now, cryptocurrencies came down from much higher levels. A lot of the altcoins are getting washed out. Stocks have come down from some really overvalued levels, some of them come down over 90%. Bonds were taking a hit as interest rates increase. That's not good for bonds and creditors. For example, when there's a default on the bonds, like we saw, 17 billion or 27 billion, whatever, of Credit Suisse bonds just being eliminated. That one was in the news, but there's going to be a lot more defaults on bonds. There's a lot of smaller corporations that have bonds or have issued bonds that they're not going to be able to meet their covenants. There's pain now for regular people due to the massive interest rate increases, the record debt that we all have. We're living on debt. We're living paycheck to paycheck. This is pain that's being felt now already. And this rolling recession is also making it worse. And pain to come, things that have yet manifested. Besides the pension crisis, real estate prices, altcoins are going to get washed out. And I don't just mean in terms of the price of the altcoin. I'm talking about a lot of these actually disappearing, not existing anymore. That is a matter of time. I'm not saying all of them. I'm saying the majority of the altcoins are going to fade away. The effects of the interest rate are just starting to kick in now. There's quite a delay from when they raise rates to when it actually has an impact on the economy. Pain to come is going to be the default deluge that I've been telling you guys about probably since we first met. The delinquencies will rise now from a very low base. Bankruptcies will rise from a very low base. And more pain to come, I put down awareness. Your awareness and everyone's awareness of the fact that the economy is absolutely broken. That's going to be a pain point because you notice the problem and you actually look at it, which is a really hard thing to do. And you guys know about this stuff because you're here, but more than 99% of people have no idea about any of the problems that are happening right now. Or if they see the problem, they find reasons to say that it isn't actually a problem. And here's another big one for more pain to come. Everybody's dancing around with this recession. Is it going to be a soft landing? Maybe we don't have a recession. Maybe it's going to be a big recession. It's already started. We're not in it. Everyone's bouncing around talking about this recession. But I've always been consistent on one aspect of it. Coming up, even though we're in different parts of recession right now, different parts of the economy at a different time. As I explained it in the rolling recession video, you can watch that if you want to understand what I'm talking about. But coming up, there will be an actual recession that is so significant, so self-evident, that it will silence all the naysayers. And then I don't have to start hearing people talking about soft landing, soft landing. The depths of this recession will be so significant and the effects of it that no one's going to be able to anymore talk about no recession, soft landing, any of that stuff. It'll be over. It'll be an actually strong enough recession that people will stop mincing words. But I'm going to take you back in time again for a second because I want you to remember what it was like a year and 3 months ago. I want you to remember the kinds of things we were dealing with at that time and how you felt compared to how you feel now. Wholesale prices measure rose 9.6% in November from a year ago, the fastest pace on record. As I told you, that inflation will get greater and greater, and now I'm telling you that it won't go too much more from this point. Now, as we watch the next part, keep in mind that according to the Bureau of Economic Analysis, corporate profits hit 22.6% in 2021, while in the most recently reported quarterly period, which was quarter 3 2022, corporate profits compared to 22.6% for the year for 2021, in the last quarter, corporate profits came in at 0.0%. This is showing you that the economy is slowing down. Big companies, small companies, corporations are taking a hit. Business is slower. Profits are lower. And just think how wonderful that all is if this is all before we even have gotten into the recession proper. But none of this is personalized trading advice for you, but there's some moves you could have made that would have worked out well. And the reason I'm telling you them, not because, well, it's too late now, but because then you'll see how it would have been the right move. And then you can extrapolate that to times right now. Moves you can make right now based on some of this. And I'm going to tell you also moves you can make. You would have wanted to avoid many of those manias when the share prices are getting so overvalued. And of course, you always want to avoid overvalued shares. But there was a time where the overvaluation went way too far. It overcorrected way too far to the upside. And generally what happens is that it'll eventually reverse and correct too far to the downside, overcorrect. Some stocks fell as much as, and this is an extreme example, of 70%, 80%. The majority of stocks all declined to different degrees, different levels. And that all applies to what you can do right now too. You have to get out of these overvalued shares, in my opinion. Do what you want. I don't know anything. You would have wanted to avoid luxury items, discretionary spending items, fancy watches, expensive steakhouses. Lean more into the low-end, low-price retailers like Walmart and dollar stores. You would have wanted to flee from risk-on assets and rather move more towards risk-off, in my opinion. And when interest rates are going up so much, you're going to want to not be involved with technology stocks because they're more interest rate sensitive because they generally have a ton of debt on their books. And as always, avoid zombie companies. And if you didn't know that, then there's nothing I can do to help you. Zombie companies are companies that are only existing, not going bankrupt, not collapsing, not dying, because they're able to pay the carrying costs on the debts they have. Not pay down the debt, just not die. And to beat a dead horse, I always say you should get into highly profitable gold and silver miners, especially right now. No, it's not too late, everybody. Remember what Warren Buffett said. Give everybody else the bottom 5% and the top 5%. Give me everything else in between. You may want to look at defensive stocks, things like utilities, where they're more stable and less speculative. You might want to keep a bunch of cash on hand to take advantage of the hundreds of opportunities that are going to be showing up all around you relatively soon, right in the middle of this recession. And I have a statement on my script here that says, spread out your implosion risk. What I mean by that is that you don't want to put all your eggs in one basket. You don't have $10 million in Silicon Bank or any bank where they're only going to guarantee $250,000 of it. So people always tell you diversify when you invest in stocks. What about diversifying when you hold your money in the bank? And of course, as always, I'll tell you exactly what I would do. You get involved with the best up-and-coming companies when they're still small, when they have a low employee headcount, when they're just passing the proof of concept phase where they say, okay, we make a product that people want, there's value there, we can make it for a low enough price that we could sell it to them and make a profit for ourselves, and there's a lot of demand for it. That's the best time to invest in a company. You might want to be investing in the company and sitting on the shares for years, decades, as they grow in value. A lot of big companies started small. That's what we're all about on the peterleeds.com newsletter. You guys know that I think you should get out of real estate. I don't mean like sell your house and go rent an apartment. If you live in a house, don't worry about the price of the house unless you're going to sell it. Well, you certainly don't want to speculate on real estate right now, own 2 or 3 different houses. You certainly don't want to buy your house now if you don't have a house. Now it's not the time to buy. This is a seller's market, and it'll become a buyer's market when there's values all around you. A lot of houses have a long way to go lower. Why step in front of a train? And don't be greedy. If you have profits in something, you might want to look at taking some profits. And you don't have to sell 100% of anything at any time. I always say that if you have a stock that is doing well, you don't have to say, okay, sell it or buy more. You could sell some of it and lock in some gains. But you've always got to make your own decisions. I'm not giving you any advice here at all. I'm going to give you my new updated inflation outlook premise. What's going to happen is that there will be so much monetary creation as a response to the pain points that we're all going to be facing coming up. And that monetary creation overreaction is going to lead into a much higher inflationary period for a long time. There comes a point at the end of the road, you might say, where we are buried beneath so much debt that there's no way to get out from under it. That point for America was about 22 years ago. And that is also what my upcoming video, The Big Inflationary Bounce, is all about. But to be clear, I believe inflation will still continue to decline for quite some time, and that decline will be enhanced by the recession or the depths of the recession. The more difficult this recession actually is, the more pressures against inflation. People aren't going to be buying anything. And last one, and then I'm going to go throw up in the sink again. Hey, you guys want the market manifest for free. One of my favorite publications. If you want to get it, just go over to peterleeds.com. It's there available for you. And there's also a bunch of other online learning tools that you'll really enjoy.